Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you're ever going to need as a dividend investor. In this series, I outline the 5 most important dividend stocks that you need to know about going into each and every week, and share with you some information on each of them so you can decide if any of these stocks are the right stocks for you.
It's like witnessing a miracle.
Now, while all the information in today's video will be provided to you at the low cost of free, if you're wondering how you could ever repay me, it's quite simple. All you need to do is leave a like on this video as it helps others find this series and the channel, and then comment down below at the end of the video and let me know what you thought of this week's list. Once those 2 things are completed, we'll call it even, so I'll wait.
Deal?
You drive a hard bargain.
Now, without further delay, let's go ahead and find out the first stock you need to know about on this week's list. Coming in at number 5, we have Caterpillar, stock ticker CAT. CAT is a quarterly payer in the industrial sector, paying $5.64 per share per year, with a forward dividend yield of 1.56%. CAT has been paying and growing this dividend over the past 31 years. They have a 3-year dividend growth rate of 8.07%, a 5-year dividend growth rate of 8.62%, and a payout ratio of just 23.74%. Now, at the time of recording, Caterpillar was trading 5.61% off of their 52-week high. They have an ex-dividend date of July 22nd with a payout date of August 20th. And looking here at this chart, you're going to be able to see the growth of $10,000 both with and without the dividends being reinvested versus the S&P 500. Up at the top, Caterpillar would have turned into $40,557.08 compared to the S&P turning into $33,908.31. That's a difference of $6,648.77. Down here at the bottom, without reinvesting those dividends, Caterpillar would have still brought back $34,361.45 compared to the S&P's $31,105.55. That's a difference of $3,255.90, and the difference between reinvesting and not reinvesting those dividends was $6,195.63. Next up, coming in at number 4 is Marsh & McLennan, stock ticker MMC. MMC is a quarterly payer in the financial sector, paying $3.26 per share per year, with a forward dividend yield of 1.49%. MMC has been paying and growing this dividend over the past 15 years. They have a 3-year dividend growth rate of 15.16%, a 5-year dividend growth rate of 11.34%, and a payout ratio of 34.05%. Now, at the time of recording, Marsh & McLennan was trading 0.55% off of their 52-week high. They have an ex-dividend date of July 25th with a payout date of August 15th. And again, looking at this chart, MMC, while reinvesting the dividends, would have brought back $49,865.81, which outperformed the S&P 500 by $15,957.50. Down at the bottom, without reinvesting the dividends, MMC would have brought back $45,384.10, outperforming the S&P by $14,278.55. And that results in a difference between reinvesting and not reinvesting those dividends of $4,481.71. Coming in at number 3 is a very popular stock in the dividend community as well as the do-it-yourselfers. Please welcome Lowe's, stock ticker LOW. Lowe's is a quarterly payer in the consumer discretionary sector, paying $4.60 per share per year with a forward dividend yield of 1.91%. Now, Lowe's has been paying and growing their dividend over the last 62 years. They still have a 3-year dividend growth rate of 23.26%, a 5-year dividend growth rate of 18.05%, and a sustainable payout ratio of just 34.31%. Now, at the time of recording, Lowe's was trading 8.2% off of their 52-week high. They have an ex-dividend date of July 24th with a payout date of August 7th. And looking at this chart, you'll be able to see a $10,000 investment while reinvesting your dividend into Lowe's would have brought back $58,259.56, outperforming the S&P by $24,351.25. Without reinvesting those dividends, down here at the bottom, Lowe's would have still turned into $53,597.59, outperforming the S&P by $22,492.04, and the difference between reinvesting and not reinvesting those dividends was $4,661.97. And really quick, now that we're about halfway through this video, if you were stingy with your like before, what else do you need to see? Go ahead and leave a like on this video as it helps out the channel, as I mentioned before, and don't forget that comment section down below. I want to know what you guys think of this list. But now, let's get to number 2. Coming in at number 2 is one of my favorite stocks in my personal portfolio and the home of the
Holy Grail.
A $1.50 hot dog. Say hello to Costco, stock ticker COST. Costco is a quarterly payer in the consumer staples sector, paying $4.64 per share per year with a forward dividend yield of 0.55%. Costco's been paying and growing their dividend over the past 20 years. They have a 3-year dividend growth rate of 13.46%, a 5-year dividend growth rate of 12.33%, and a payout ratio of just 26.14%. At the time of recording, Costco was trading 5.12% off of their 52-week high. They have an ex-dividend date of July 26th with a payout date of August 9th. And looking at this chart, you can see why I love this stock. A $10,000 investment into Costco 10 years ago while only reinvesting dividends would have brought back $88,863.49, outperforming the S&P 500 by $54,955.18, while the $10,000 investment down here at the bottom without reinvesting the dividends would have still brought back $77,371.01, outperforming the S&P by $46,265.46. The difference between reinvesting and not reinvesting those dividends was $11,492.48. And coming in at number 1 is the stock you must know about going in the next week is a stock that's newly available to be on my list. Say hello to CSW Industrials, stock ticker CSWI. CSWI is a quarterly payer in the industrial sector, paying 84 cents per share per year with a forward dividend yield of just 0.28%. CSWI has met that threshold and has been paying and growing their dividend over the past 5 years. They have a 3-year dividend growth rate of 12.02%, a 5-year dividend growth rate of 42.03%, and a super sustainable payout ratio of 9.15%. Now, at the time of recording, CSW Industrials was trading just 0.04% off of their 52-week high. They have an ex-dividend date of July 26th with the payout date of August 9th. And this one only has 8.8 years worth of history, but the returns are ridiculous. In those 8.8 years, $10,000 while reinvesting your dividends would have turned into $98,997.41 versus the S&P turning into $34,195.95. That's a difference of $64,801.46 on the side of CSWI. Down here at the bottom, still 8.8 years ago, this time without reinvesting your dividends, CSWI would have still brought back $97,134.01 versus the S&P bringing back $31,863.02. That's a difference of even more money at $65,270.99, and the difference between reinvesting and not reinvesting those dividends was $1,863.40. Now, if you made it here to the end of the video and you're watching this on or after July 22nd of 2024, you might want to make sure that you have that subscribe button clicked along with the bell, as some of the ex-dividend dates I mentioned have passed, which means you just missed the dividend from those companies. So like I said, make sure you're subscribed and come to the channel every Friday at 8 a.m. Central Standard Time so you don't miss out on an opportunity at your next great stock. Don't forget to use that comment section down below to let me know if you guys own any of the stocks mentioned in today's video and how they're doing for you. And if you don't own any of them, did any of the stocks I mentioned pique your interest? And if you happen to miss part 2, aka last week's episode, you can still check that out right here. But until next time, see you.